Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and let's spend a few moments talking about sectors. What I'm looking at right now is the banking sector. I will talk to you about as to why I like the banking sector and also why I am beginning to change my tune a bit on the semiconductor sector, of which we have an opening small short position, but that may end as of today or tomorrow, the latest, depending upon whether or not this market holds up. So what we're going to do is we're going to go over a couple of charts, discussing why I have a little bit of concern about the market and this market's ability to continue this trajectory higher. What signal are we getting? And it's not a major one, but it's one that shouldn't be ignored nonetheless. Two, we're going to go over the semiconductor trade. Three, we'll talk about the banks. Four, we will talk about the members' stock chart request. And then into five, the pre-market activity. Let's get to it. Let's talk about the VIX. The VIX, despite the fact that the stock market has been rallying of late and hitting all-time high. When I say stock market, I'm referring to the S&P 500 in particular, because the VIX runs counter to the S&P 500. Now, as the S&P 500, as you could see here, is pressing on to new all-time highs, the VIX is hanging in there. We're not breaking down, and we should be. Now, they don't always trade in an inverse correlation, but normally they do. So one of them has it right, the VIX or the stock market. So let's just keep this on the back of our minds. I'm not saying go selling your stocks or don't put on a new trade. I'm just saying that if you're going to initiate a new trade, think about possibly keeping that new trade smaller than what you would normally do. Keep your risk a little bit more measured than you would normally do. If the VIX breaks down, well then you can become a bit more aggressive to the long side. And you may be saying, you know, Bob, you always say when the VIX is low, you got to go. When the VIX is high, you got to buy. Sure, but of late, the 12 handle or a 10 handle, you know, we've seen those levels before, and we've stayed there for a prolonged period of time. And if you ignored the fact that the stock market back in October, November, December of 17 was making all-time highs because you were afraid that the VIX was low, you missed out on a lot of money that could have been made. So watch for the breakouts on the VIX, not necessarily the new lows they're hitting. Watch for when the VIX breaks out, like it did back here in January. That's when you get concerned. So just a word of caution. Let's move on to the banks. Why am I talking about the 10-year Treasury yield? Because it is rallying. And the banks do well in a rising interest rate environment. Not necessarily the entire stock market, but for the banks, we know that rising interest rates benefit their bottom line. Why? It's called NIM. It's an acronym, net interest margins. They make more money on their loan portfolios in a rising interest rate environment. So I like the regional banks. I don't like the money center banks. Far too concerned about their trading desks. I prefer the regionals. Members, you already know what that symbol is. Here is the XLF, the financial sector spiders. We pulled back over the course of the past couple of days after recapturing the support level. We closed well off the lows of the day yesterday. We are rising on Stokes. We have a beautiful W formation formed. We have now broken out above the pivot point of that W formation at 28.38. I think that we are going to move higher. We will be adding to our bank trade very shortly. So that's my bull case for the banks. Now, as for the semiconductor sector, we opened up a short position on a bet that we would hit resistance here and we would fail. So yesterday, We did manage to close above this upper band of resistance. Now, it's time to rethink the trade here, right? We have broken out. We could sit here, and this is what a lot of traders do. They sit here and they bet that, you know what, this is probably not going to hold up. This is probably not going to work out. It can't be right because I'm short. I have to be right. That is not the proper way to think. What you need to look at here is that, okay, you opened up a small opening position, say 50, 100 shares. What are you down? 100, 150 bucks? So what? If you broke out, swap out, re-enter the trade to the long side. Don't ignore the trend and the breakout because you have a ton more profits to be made not fighting the overall trend. And we are breaking out of a massive pennant. Let's throw another line up here to illustrate. In fact, let's go to a weekly chart. Okay, better. Weekly chart, much cleaner, much less noise. We are breaking out of a pennant formation. A huge breakout here, assuming that we close out the week above this upper band of resistance. So I think that if yields continue higher and we close out the week above this upper band of resistance, that we will have a new major breakout on the banks. Do you want to fight this? I don't think you do, all right? So please don't fight these breakouts. So members, stay aware of an alert of us stopping out, remaining very humble of our short of the semis. It did not work out. That's what trading is all about. First out, best out. Move to the sidelines. And when possible, if you're wrong, is it an opportunity to get long of a position and make money to the long side? It's not about ego. Let's take our egos and check it. I digress. Let's move on. All right, member stock chart request, Nu Skin. I mentioned the other day that Nu Skin was a watch stock, and I talked about topping action and why we must pay heed. And it pulled back. I said, let's watch and see if it breaks out above this resistance level, and it did, and it's traded sideways. What's the shot here? What's the play? I think that you could buy these shares, keep it small with a stop right below the lows of either 79, which is this support level here, or if you want to keep it a little bit loose, 78.69, which is probably what I would do. Or you can wait for a breakout above, let's call it 81.48 per share. So I think that we're setting up here for another move higher. If I'm wrong, well then, plan on a stop. Again, at worst, below 78.69 on a closing basis. Harvard Biosciences, weekly chart. All right, the play here is to watch the weekly chart. And we are pulling back. We've already retested the lower band of the rising uptrend channel last week. This week, we are down again. No big deal. We're holding support. Let's not panic. We did not put in a new weekly low, and we are trading off the lows of the week. So far this week, a down week, yes, but nothing to worry about. The Stokes is still rising, RSI is still rising, no breakouts there. We did see big down volume for the past couple of weeks. I would keep an eye on the volume. If we drop down below this 3-month moving average, then I'll become a little bit more confident in the trade to the long side. Ultimate oscillator, holding on, looking really good. MACD potential lower high here, but we're coming off of a double bottom setup. I think that we're still healthy here on MACD. I think this chart still looks good. I think that there is more upside potential here, but I would wait for either a retest of this lower band of support at, let's call it 560, 550, with a stop right below 540, or if you wanted to keep it a little bit loose, last week's lows on a closing basis, 535 per share, and then I would get out. But I think these shares can be bought on the pullback. Daily chart, consolidating nicely. If you wanted to play it this way, here is our daily chart. All right, so you can see we're consolidating here, and I always look back in the past because why is it bottoming here? What's the history? What's the relevance of where we began consolidating. Well, if you look back only a short period of time, it was resistance in July, then it became support in late July, early August. It was support back here in April. So we have history here. I would look to buy these shares either now or the stop right below these lows here at 560 or 535. Then I would add aggressively on a breakout and a close above $6 per share. The chart looks good. Just watch out for these Stokes here. I hate Stokes trading down below the 50 level. What I would look for is something similar to what you had back here, was a higher low above the 50 level. You don't get that all the time with larger cap stocks. It's rare, to be honest with you. But with these smaller cap names, they're a bit more volatile, and you may see a hook up here on the Stokes. I would be very cautious. I would want to see this resolved, meaning we get a double bottom setup, and that would imply that we're getting a higher low from the prior low, and the probability of a move higher is pretty good. Just watch these Stokes and watch RSI. I want to see it close above 50. You want your momentum indicators validating any breakout. And if you get a breakdown below 560, I would keep that stop tight, because that means that your indicators, your momentum indicators, in all probability are breaking down as well. You're going to want to get out. Keep that loss very, very small. BLFS, BioLife Solutions, daily chart. We broke out several days ago. We're consolidating gains here. We may bop around here, holding 2265. That's the breakout point. Actually, 2286 would be the breakout point. You don't want to see the shares close down below that level, because that would be a breakout point failure. I think that these shares can be bought. You can nibble on them and then look to buy or add more on a rally up and through this upper band of resistance. So I'm loving the setup here. Just keep an eye on your RSI and on the Stokes. You're going to want to see a breakout on these names with a breakout on price. That's a validation that the breakout is healthy, meaning you have healthy momentum behind it. How will you know? We close at the highs of the day on rising up volume. That'll also help support the momentum indicators. Watch MACD, possible lower high here. Nothing to be concerned about. MACD is more of a lagging indicator. I don't pay all that much attention to it. I pay more attention to the histogram bars, usually on extreme overbought and oversold stocks, though. I concern myself more with the Stokes, RSI, price, and volume. Tractor supply. All right, so we pulled back. We're dancing around here, holding support. We flashed a bullish key reversal yesterday. Now, what I will note here is a very healthy event. We broke out on RSI, good stuff. We were in a downtrend. We broke out here on the 21st of August, rallied, pulled back. Now, guess what? We're holding the prior breakout point, meaning the prior resistance level is now acting as support, and we hooked up yesterday on this bullish key reversal off of support. Really good stuff. Now what we're looking for is our Stokes to hook back up. Let's consolidate within this range, then look for a breakout. I think that Tractor Supply is setting up as a long trade. I remain bullish on Tractor Supply. Viper Energy Partners. I love the symbol here, Venom. Tight consolidation. No reason to believe that this stock is not going higher. We've stalled out here a bit. It's a consolidation. Volume has dropped off some. MACD is a bit of a concern. A little bit extended, long in the tooth. But you can't argue. We'll come back to this chart. You can't argue the long-term trend. We are a bit extended here on a weekly basis, folks. We do have a new weekly high, but just barely. We're getting tired here. Indicators still look good on a weekly basis. I'm not saying that these shares cannot be bought. I'm saying that they're a bit long in the tooth, so your upside potential may not be great before you get the next pullback, but I still think that the path of least resistance remains higher here. Watch for a breakout above $40.48. That's the weekly high. If we get a new weekly high this week, I would look to put on the trade with a stop right below, let's call it, let's just say $39 per share on a closing basis. We close down below that level, I would stop out. Even if you wanted to keep it tighter, after putting on a new breakout trade above $40.48, if you wanted to keep your stop right below $39.69, which is the low of the week, that's fine. Why am I keeping it so tight? Because if we rally up and through this resistance level, then roll back over and retest and take out the lows of the week, that's a breakout point failure or a bull trap. I want no part of that, especially when you have your weekly chart so extended, okay? So let's pay a little bit of respect to the weekly chart, the higher level view. I'm not saying don't buy it on a new weekly basis. I'm saying it could be bought. Let's keep that stop loss very tight, though. If we take out the lows of the week, you're going to want to be out of that trade. FTNC. We have a lot of member stock charts requests today. FTNC. FTNC. Fortnite Inc. Looking good here. New weekly high. Getting a bit extended, though. And volume is dropping off here sequentially, week over week. The probability of us putting in a new lower bar on up volume is probable, right? Because that's what we've seen for the past several weeks. So the trend is continuing, yet we continue to make higher highs on lighter volume. That's a concern. We're certainly seeing strong momentum. Daily chart. Yeah, we broke out yesterday. RSI is 81.92. It can go higher, right? Just because it's above 80 on RSI doesn't mean it can't go higher. And in all probability, it will go higher because it's above 80. The problem is that you have limited upside potential here. So in this case here, I think it could be bought on a new daily high or a quick pullback. However, I would use a tight trailing stop loss order. And that will allow me to take advantage of a blow off top. And it will take me out, that trailing stop loss order. I wouldn't keep it good for the day. I would keep it good till cancel. And that'll allow me to get out as close to the highs as possible. So that's the play on FTNT. All right, this trade here is for Yancey. And he's certainly accurate that we are in fuego here. I share the opinion. We're going to kick this analysis off with a weekly chart. All right. So on a weekly basis, we are obviously up over last week. That's good stuff. We are at quarterly chart real quick. We are at all-time highs. Quarterly chart, we have RSI at 93.63. Does that mean it can't go higher? It can go higher. So just be aware, the higher level view of CGC is that we are breaking out, but we are overbought. This sector is in fuego. It's probably going to go extreme overbought on a daily basis before it blows up. But on a monthly basis even, you could see that we are breaking out of a pennant formation. So the higher level view here is pretty solid. We are, in all probability, going higher in the intermediate to longer term. Now we have a president that he's not pushing back against the weed stocks. He's pretty friendly towards them. So that's a really good thing to have. And I believe it was only several months ago he pushed back against the Attorney General, Jeff Sessions, who was going to crack down on this sector. And he pushed back against them. So that's a very good signal for the sector, and it's in all probability why it continues to rally right now. Now back to the weekly chart for a moment. What concerns me here is that we are trading above the third standard deviation Bollinger Band on a weekly basis. But as you saw back here, as you saw here, it can stay overbought for a period of time. You're going to get a nasty pullback in the coming weeks. It's going to happen. But the prelude to that nasty sell-off, in all probability from past experience and history in the stock, is that you're going to get topping action, meaning topping tails, some sellers, some profit takers, and that'll be your signal that you need to step away from the shares. Now, we do have a hollow-filled candlestick on a weekly basis, a bit of indecision here. We have a couple of trading days left to go in the week. I think that at current, it is a momentum stock, and that if you get long of the shares, you need to use a trailing stop-loss order. We're up 3% on the week. We did pull back on the 28th. We rallied yesterday with a bullish key reversal, so the play here would be to wait for a breakout above this upper band of resistance. And if we close above $46 per share, I would nibble. I would then look to add more on a rally up and through the week's highs at 48.19. 2-hour chart. This is another way to play it. And I would only do this with a momentum stock, a stock that is in a strong uptrend using the 2-hour chart. I am not a day trader. All right, so on a 2-hour basis, we have in fact broken out. Now, if we get a pullback this morning and a retest of the breakout point, let's call it 45.75 to 45.50, I would buy. If we roll over and close back down, even on a 2-hour basis below this lower band of support, I would stop out of the trade. I would look to add after opening up my small position on a rally up and through 48.19. So that's a bit different than my entry strategy from a daily base. It's a little bit more aggressive, and it requires you to be a little bit more deliberate with your risk management, stopping out. But that's another way to trade CGC. Let's segue over to the pre-market activity. I'm going to do this really quick. The dollar recaptured support overnight. Now it is threatening to take it back out again. If we make a new low below 94 point, what was the low here? 469. I think the dollar is going a lot lower. And I would look to buy gold and the gold stocks, which have pulled back nicely. And I'd be looking for a breakout here on gold and or the gold stocks above this resistance level here in green. So despite the pullback on gold and the gold stocks, I still like it. We're off the morning's lows. Let's go to the pre-market activity on the indexes. The S&P 500 pulling back. We're down 1/4 percentage point on the session. So beware here. So we may drift down to retest this rising 20-period moving average. And I will note, volume on the S&P 500 daily basis has been very, very light. So be careful. Now, if we rally off the lows of the day, take out yesterday's highs, it's game on to the long side for the S&P 500. Remember the VIX. I spoke about that earlier. Keep that in the back of your mind. The NASDAQ pulling back as well. A little bit more orderly than the S&P 500. Yes, we're down more on a percentage basis, but it looks a bit more orderly than the S&P 500. Watch for a breakout here. These charts still look good despite the morning pullback. It's normal to get a morning pullback, and it's very bullish when we rally off the lows of the day and take out the prior day's highs. Really bullish stuff. If we get that, it's still game on to the long side for the stock market. I want to take a look at the 10-year Treasury note, and that'll tell us where yields are headed today. All right, so we're up a bit on the note. That means that we're down a bit on yields. But overall, this is a bearish chart. I think that this rally, in all probability, will fail on the 10-year Treasury note, and that we are going to go higher on yields. Take note of where I just snap this resistance line at. It was actually, it was support back here on a couple of occasions, right? Now it's acting as resistance. If we break down below this lower band of support, it's game on to the long side for yields. Therefore, if the market holds up, meaning the S&P 500 in particular, it's game on for the banks. So remember, we'll be watching today the banks, we'll be watching the 10-year yield, we'll be watching the VIX, and we'll be watching for swapping out our short for a long on the semiconductor sector. Members will be sending out alerts. Everybody have a profitable trading day, and I will talk to you soon. Be well.